Hey everyone, welcome back to Corporate Decoder. Ever wonder what happens when a company's stock price dips below $1? Well, today we're cracking open ChargePoint's latest filing to see how they plan to avoid getting kicked off the New York Stock Exchange. It involves some financial maneuvering and a bit of corporate soul searching, so stick around. Before we dive in, if you're all about getting the real story behind these reports, make sure you're subscribed and don't forget to join our Discord community, linked in the description below for even more insights. Alright, to start, we're looking at ChargePoint's preliminary proxy statement. What is this, you may ask? Well, it's basically a document that they send to all of their investors with information on topics to be voted on at the upcoming annual shareholders meeting. Basically, investors get to voice their opinion on big changes happening at the company. We are going to find the interesting bits and see what they tell us. First up, they're asking shareholders to elect 4 directors to the board. These directors, once elected, will serve until 2028. Directors are important people that ensure the company is being led correctly. Has served as a member of ChargePoint's board since 2018. Has served as a member since 2017. These people have a lot of experience. Shareholders will get to vote to keep these guys around or put other people in place. Another item up for vote is something that might sound boring, but it's actually really important. Ratifying the selection of PricewaterhouseCoopers as their independent accounting firm. This is about making sure the company's financial statements are being checked by an honest third party, basically a trust but verify approach. In 2024, PricewaterhouseCoopers billed $3.9 million for audit fees. In 2025, it was $3.095 million. Audit fees are what you pay to make sure you don't go to jail. This means in 2025, they paid less for that protection. Also, tax fees decreased from $310,000 to $189,000. The shareholders also get an advisory vote on executive compensation. This is not a binding vote, meaning the board doesn't have to listen, but it's a way for investors to say whether they think the executives are being paid fairly. Now, for the big one, they want to get approval for a reverse stock split. What is that, you may ask? Basically, it means taking a bunch of existing shares and combining them into fewer shares. It's like trading in a bunch of small bills for a few larger ones. It doesn't change the total amount of money you have, but the individual bills are worth more. ChargePoint wants the option to do this at a ratio between 1-for-2 and 1-for-30. Why did that, you ask? Well, there's a good reason. They got a notice from the New York Stock Exchange saying their stock price was too low, below $1 per share on average for too long. That's not good because the exchange could kick them off the list. It becomes harder for a company to raise money. If their stock isn't traded on a major exchange, a reverse stock split could theoretically raise the price high enough to stay listed. But there is a big risk here. Here's the deal. A low stock price can turn off big investors and make it harder to attract and keep employees. Also, many companies that do a reverse split see their stock price drop more. Also, there is no guarantee that the stock price will go up enough to get back on the exchange. But if they don't do the reverse split, there is also a risk of getting kicked off the exchange, which could make it even harder to raise money. Big investors may be impacted. Next, they want to remove something called a corporate opportunity waiver from their charter. The Corporate Decoder says this may mean something changed with who's on the board. Basically what happened is that this got them sued and they're trying to avoid future issues, so they're getting rid of it. Finally, they want to be able to adjourn or postpone the shareholder meeting if they don't get enough votes to approve the reverse stock split. It's like saying, if we don't get the answer we want the first time, we're going to keep asking until we do. All these are related because the biggest thing is to avoid a big trading drop. Now let's meet the team leading this charge so you know who's who. Rick Wilmer is the president and CEO. Rebecca Chavez is the chief legal officer. Jagdeep Singh is the chief customer experience officer. David Weiss is the chief revenue officer. And finally, Mansi Katani is the chief financial officer. These are the people who need to make sure this company stays afloat. So how much are these people being paid? It's always important to see. So now is executive compensation. For the year ended in 2025, Rick Wilmer made $3.1 million. Roxanne Bowman, the board chair, made $244,527. If the execs did not lead the company well, they shouldn't be rewarded well. Now, what does the company think is appropriate? It is good to see they do have an established. The CEO is expected to hold 5 times their base salary. Other executives are expected to hold 1 times their base salary. So it seems that their interests are aligned with long-term company value. The final item to look at is how many votes are needed for these changes to actually be put into place. Removing the corporate opportunity waiver requires more than half of the shareholders to vote in favor. And the reverse stock split requires that votes for the reverse stock split exceed votes against the reverse stock split. Now let's put this all together and see what's really going on. ChargePoint is in a tough spot, their stock price is low, and they need to do something to stay on the New York Stock Exchange. The reverse stock split is a gamble and it could either save them or make things worse. They are also trying to clean house by removing a potentially problematic legal clause, while the executives seem to be well aligned with the shareholders' long-term success because of stock ownership policies. The big risk is, and always is, with small companies in a speculative position. Will this plan even work? If they can successfully execute this reverse stock split while cleaning up legal issues, then things look good. But if not, it will become harder to attract new talent and funding. This means we should closely monitor their upcoming earnings and reports. What do you think? Will this reverse stock split work or will it hurt ChargePoint? Do you have your own insights or concerns about their plans? Let's discuss it down below in the comments. If you found this breakdown useful, please like the video, subscribe and turn on the bell for the future alerts. Also, don't forget to join our Discord where we're discussing all the latest corporate shenanigans and investment strategies. Link is in the description. Thanks for watching and see you in the next video.